Thanks so much for tuning into the Trade Setup with me, Niraj Shah. It's an important day of trade, arguably the most important day of trade, because today might well determine if the rally that we've seen in the last few days, particularly yesterday, but we being at all-time highs, will that continue or could that see a bit of a pullback as well? If the exit polls are to be believed, the markets seem to be in a safe zone with regards to the outcome being what the market wants. The question is, what will the day throw up? First, the global picture, which is actually not looking too bad, by the way. The US stock futures may be flat after a sluggish first trading day of June, but the other parameters are positive. So Brent crude has fallen below $80 per barrel for the first time since February. Why has this happened? Because OPEC Plus is planning to phase out voluntary production cuts as well. This is a big thing at $78 or thereabouts for oil is a very positive piece of news for Indian markets and every oil importing country, of course. The other aspect, US yields have slipped as manufacturing shows the first signs of, not the first signs, but signs of contraction. Let me rephrase myself. But yields are at 4.4. So yields coming off as well is actually a positive piece of news. And while the US markets by itself were okay. I mean, NASDAQ was up about 1/3% and Dow was down. The Asian markets too are a bit mixed really in the session today because Shanghai and Hang Seng, do their own trick, but Nikkei is down about 0.5%. Kospi was mixed as well. So it's not that we have very formidable cues, much unlike yesterday, by the way. The implied open should come up on your screen next at this hour, which is about 7:40 a.m. about 62 odd points, and this is to be anticipated. We've had a really strong move in trade yesterday, and I think the markets will now bide their time and see what the eventual verdict is, and then the serious long-only money could come in yet again. By the way, long-only money did come in yesterday because there's a serious delivery-based buying that we saw in some of the stocks yesterday as well. So that is something to be kept in mind. So what's the trade setup for the day today? Well, the trend is strong. It is not in the extreme greed zone as yet. There are a few quant indicators that I look at. They've oscillated between extreme greed and extreme fear. Don't quite see those, any of those, 2 or 3, any of those being in the extreme greed zone as yet. So is this market ripe for a pullback if indeed it goes higher? As of now, it is not. I don't quite know how it will shape up during the course of the day today, but and therefore, it's a very difficult call to take on valuations. You can't take a strong, let's assume the market from 23,263 goes up to 23,500 or 23,750. Is it therefore a very expensive market? I debate that. Let's look at a couple of tables to kind of just point that out, because a lot of you are hit with the narrative, right, that India is expensive. Now look at this. FY25 EPS is believed to be about 1150. Now, if we indeed see the Nifty at different levels, 23,250, which is circa the level yesterday, or 23,500, which could well be the level today, or 24,000 as well. What is the PE multiple? 20.2 times, 20.43, 20.87. On that high base of earnings, Nifty being at 24,000 doesn't make it very expensive relative to 23,250. That's the point I'm trying to make. Even otherwise, just look at Nifty at various levels of EPSs at 23,500. This is one level that I've chosen. The EPS for FY24 is at 1,005. 25 and 26 are expected to be 1150, 1299. This is a 13% earnings growth. This is a 15% earnings growth. On the basis of this, Nifty trades at 20.43 times FY25 current year earnings, which is because we're in FY25. And in 6 months' time, the index will start discounting these numbers, assumptions of these numbers, 18 times. This is below long-term averages. So that's the point I'm trying to make, that I don't think we are expensive. At least I don't think so. Now, we had some positive fund flows as well in trade yesterday. The first real big sign of FI money coming in without too many large blocks, of course. And therefore, let's see if this number continues. And this may well pull some of the FI favorite stocks higher. So that's to be kept in mind. And some serious delivery-based buying that we saw in some of the stocks. So this is in crore shares, by the way. Bank of Baroda, SBI. Yesterday's delivery, 1.13 crore, 2.88 crore versus 0.72 and 1.26 crore shares. So pretty strong delivery-based buying in those. HDFC Bank saw some serious delivery-based buying, 2 crore shares versus 1.53 a 5-day average. Adani Ports, nearly a crore versus 35 lakh shares on a 5-day average basis. Some of the others as well on the infrastructure side, maybe an NBCC or Power, NTPC, Power Grid. Look at the kind of buying that has happened into some of these stocks yesterday versus the 5-day averages. So we're seeing some serious delivery-based buying in some of the stocks. What about stocks to watch today? I don't think too many stocks will matter, but if the results are one way, then the rising tide may carry all boats. If the results are not as per what the market wants, even positive news will not really get some of these stocks active. But Z is in focus. Was up 5% yesterday, could well be in focus today because there is a board meet on June 6th to consider fundraising. This is serious stuff for Z to come out with this surprise announcement. So watch out for this one in the session today. GSK Pharma was down 5% yesterday. Maybe some of this news is discounted, but GSK Global has plunged about 9% in trade yesterday at a point of time. The drug maker must face Zantac cases in Delaware, and this might have a further impact on this stock. I mean, it's not a trading play, but for all of you who might have this stock, some of you might have this stock, this might be important. M&M Finance has come out with their disbursements numbers for the month of May. Overall disbursements up 7%, business assets up about 23%. May collection efficiency is about 96%. Maybe the stock reacts positively. Let's wait and watch. MOIL, the May manganese ore sales are at 2.15 lakh tons, up about 41%, which is very strong. Maybe the stock reacts positively further. Maybe Biocon reacts positively. It's gotten the US FDA nod for antifungal medication as well. Maybe there is some more upside here, but this stock somehow is so sluggish at these levels. Very difficult to call if it will rally further or no. Some brokerage calls, assuming that there is political continuity and the actual result today mirror what the exit polls said or better. These are some stocks that you should keep in mind. Motilal Oswal is saying some of the best stock ideas are ICICI Bank, SBI, Larsen & Toubro, M&M, Adani Ports, ABB. There is HPCL, Hindalco, Indian Hotels, Godrej Properties, and Global Health. You can rewind this a little bit and pause it if you want to watch the stocks. I'm just moving on. So these are some of the stocks from the Motilal Oswal stable. Citi is betting on infrastructure. They are betting on Adani Ports, Larsen & Toubro, as well as BEL. All of these stocks were up and active in trade yesterday. Some of those target prices might have been met as well. Don't know, but watch out for these. Jefferies is betting on HDFC Bank, Bajaj Finance, Eicher Motors, TVS, Coal India, ACC, and Shree Cement. So watch out for those. Jefferies has raised the target price, by the way, on HEG to 2,800 from 2,300. So watch out for that one. Also watch out for BPCL, HPCL, IOC, or some of the paint companies because of crude prices being lower. Remember, I spoke at the start of the trade setup about how globally crude prices have come off. So therefore, that's the other thing. On M&M, Citi's raised the target price to 3,010 versus 2,730. So that's the other stock you should keep in mind as well. Anyways, like I said, we can go on talking about specific stocks, but it's really about what the markets will do today, not as much about specific stocks. Just before I end the trade setup, something that I'll try to do. One good news, one good health observation that happened or otherwise. And to my mind, I think this stood out for me. FSSAI has directed food business operators to remove the claim of 100% fruit juices from the label and advertisement fruit juices with immediate effect. Effectively, the Tetra Pak juices that you are having, they are labeled as 100% fruit juice, whereas we all know they are not. At least a lot of them are not, and therefore, at least the ones which are not will not be able to call these fruit juices 100% fruit juice. To my mind, it was a really great announcement. It pleased me no end because it just it makes products true to label. So I was very happy with this. On a day when we are looking at the election verdict. That is the big story, and we on NDTV Profit will have an array of very eminent experts all through the day today to try and tell you what should you do with your portfolios. So do tune in on television and on our social media handles, on our live feed, on YouTube, on our website and everywhere else, on Twitter as well, or on X as well, to try and make the most of what we'll try to bring to you today. And thanks so much for tuning into the Trade Setup.